Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back to the show, John.
Jim, I'm glad to be back on the show.
John, did Rio Tinto manage to get its equipment over the winter road to the Janus Lake camp of Forum Energy Metals?
The biggest concern Rio Tinto had was that an early spring thaw might prevent them from getting all their equipment across the road. But this year we did not have an early spring thaw. Instead, what we had was COVID-19. They got the road built. They were starting to move equipment along it to the camp. And then the ruling came, we have to lock down. And basically trucks that were on the road just turned around and went back home. And it's a big problem up there because in northern Saskatchewan, there are all these First Nations communities. They're very remote. They're very concerned about COVID-19 getting in there. The medical infrastructure is not really there to deal with the unlucky percentage where the infection becomes critical and requires ventilators and all that sort of intervention. So the big issue that's emerged up there is the logistics of getting stuff done. But because of the spring thaw risk, getting the stuff in there was plan A, but Rio Tinto always had a plan B. And that was to stage out of its McGowan Lake camp, which is near the Key Lake uranium facility of Cameco. So they are now planning to go back in there in the summer. Probably not as big a program as it would have been if they had got all their equipment in. But in a couple of weeks, we'll find out from Forum Energy what specifically Rio Tinto plans to do on the Janus Lake copper play. It's not going to be nothing. It's not going to be as big as initially expected, but hopefully it will lead to new developments for this copper story. Now, Forum Energy did manage to get 6 out of 8 holes done for its Fur Island uranium prospect at the northern end of the Athabasca Basin. This was funded by Orano, the French nuclear energy company that used to be called Areva. Judging from talking to management, they did not really pull any core that was too hot to handle. So it probably has just furnished more geological context as to where the high-grade uranium deposits might be in that particular system. The company did surprise me by announcing this past week that it had staked claims called the Wollaston claims, which are just to the southeast of the McLean Lake operation. And I said, you've got a couple dozen projects scattered all over the Athabasca Basin. You and your partner spent $40 million during the last uranium cycle. Nobody gives a damn about uranium projects. Although you have all this accumulated work and title is good for, number of years, why would you stake this additional project? And the answer was that this particular claim group is something that Ken Wheatley, who was involved with the McLean Lake discovery and is their exploration VP, has had his eyes on for a long time. During the first uranium bubble from 2004 to 7, a junior had owned the ground and did some work but didn't find anything. There had been drilling done back in the 70s during those exploration booms. And then when the junior let it lapse, a private group went in there and they did another geophysical survey, and but they didn't do any follow-up drilling because obviously post Fukushima the expected recovery for uranium just hasn't happened. And they finally let those claims lapse, but they had filed assessment work which included another geophysical survey, and this revealed what Ken had always understood about this project, that it is within a northeast trend of conductors. And the conductors in this part of the world are graphite, which is anywhere else where you're looking for metals. That's not what you want your EM conductor to be. But here it's important because the graphite is the key precipitating material. When the uranium fluids hit it, it causes the uranium to drop out to form these unconformity-associated high-grade deposits, which is different from the roll-front low-grade deposits that are in the United States and elsewhere in the world. So So the idea is to go back in there eventually and drill these targets, do some more geological context work. And there have been high-grade boulders found in the vicinity, and maybe this might even be of interest to Orano because this is even closer to their McLean Lake facility, which it shares with Denison, than Fur Island. But in the last month, there has been a pretty good rally in uranium stocks, and that's because uranium, which was stuck at sort of $22, $23 a pound, has risen 50% to about $34 a pound. Now, the optics look good, but that number is still woefully below where it needs to be. Uranium needs to be north of $40 a pound for exploration in that and new mine development to be justified. But yet a lot of the uranium stocks, which got, the more advanced ones, which got beat up in the pullback during March, they have bounced back to prior levels. In some cases, like Cameco, have actually gone up. And the irony is, Cameco now not only has the MacArthur River mine on care and maintenance, but in early April it used the COVID-19 problem as an excuse to shut down the Cigar Lake operation. So its two premier high-grade mines in the Athabasca Basin are not producing any uranium right now. And then Kazakhstan, which is the world's biggest producer at 40% of supply, and it has a lower cost structure than everywhere else because it does in-situ leaching to standards that are quite different than what the American operators have to do with their in-situ leaching operations. They decided to do a cross-country 17% cutback in supply, and that also gave the Inkai project that it shares 40% with Cameco also a haircut in terms of output. So global output from the two largest producers in the world has gone down substantially. And that has created some breathing room for the spot price of uranium, which has been suffering from the endless dribble of stockpiled uranium in Japan, where a full restart of the nuclear energy post-Fukushima still has not happened. And of course, Germany shut down its nuclear energy. Now, while the pandemic has caused a major demand for a collapse in demand for transportation fuels like oil, this is not the case for nuclear energy, which provides electricity. And whether you're at work or at home, everything is still pretty much going. So there hasn't been such a significant hit for electricity. But the endless wait for when will nuclear energy make a comeback, when will all these uranium plays finally flourish again, it hasn't yet had an impact on foreign energy metals. But it may actually get some traction from that new film by Michael Moore, Planet of the Humans, which criticizes the green energy industry for not really doing that much to mitigate CO2 emissions. And they end up offering a solution along the lines of, well, we need to cut back consumption in order to reduce the CO2 footprint. And their implication is some form of population control. But that's actually not going to happen because the bottom half of the population, it's only going to start having fewer children when their standard of living is going up. And you're not going to be able to tell those people that you cannot continue to aspire for a higher standard of living, such as the world has been experiencing during the last 40 years. But what's really conspicuous by its absence from the whole film is any mention of nuclear energy as an alternative carbon dioxide-free source of electricity. And if we're going to have, and it is higher cost than fossil fuels and the subsidized renewable energy technologies, but it is the elephant in the room that's just screaming to be taken seriously again. So who knows? And a film that's still hostile towards fossil fuels, but also hostile towards the renewable energy solution as it's been practiced before, could end up becoming a springboard for a revival of interest in nuclear energy. Probably the reason Michael Moore, Jeff Gibb, and the rest don't talk about nuclear energy is that we still have the nuclear waste disposal problem, and because a strategic decision was made in the 50s to use uranium instead of thorium so that they can make a nuclear weapons grade material, those are still big issues that are wrong with uranium. But the idea of nuclear energy, maybe eventually substituting thorium, from which you cannot make a nuclear weapons grade material, maybe that is coming around. However, switching to thorium would not be good news for all the uranium bugs out there.
We'll have more with John Kaiser right after this.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with John Kaiser. John, last week you talked about Azimut's Piqua copper project in Quebec's James Bay region. What is Midland Exploration doing with its mithril half of its new copper trend?
Well, last year we talked a lot about the great copper-based James Bay area play that was going to come when Midland followed up a government showing in late 2018 and found all these high-grade boulders, and we had a tremendous period of speculation in the sort of first half of last year as they did IP surveys along this boulder trend, and then did a drill program and did a considerable number of holes, I think several dozen holes, and they did intersect high-grade mineralization, but it turned out to be limited to the margins of these dikes that had intersected the host rock, and they were too irregular, not sufficiently densely spaced to really average out to a big mineable discovery. So the mithril extension of this copper trend on the Midland ground, it has been a bit of a disappointment. And last week we talked about how Azimut and SOCLEM have done their own IP surveys along this trend, and then they chose about a 6-kilometer segment of it, and it shows similar IP chargeability high. There's also a resistivity high associated with it, which it doesn't quite make sense. They're not sure what exactly it means, but it also correlates with the magnetic trend. So it looks like an extension of what Midland found in the eastern portion that they called mithril. And so there's a bit of a sort of glumness. Well, are you going to, when you get around to drilling this, find the same thing on the Piqua project as Midland found on the mithril project? After they did the results for the Piqua, Azimut has decided we need to go in and extend the IP survey another 4 or 5 kilometers to include these 2 EM conductors within this trend. Now, EM conductors are very different from a chargeability high, because that implies extreme conductivity, which you get when it's massive sulfides. And the hope has been okay, we have this huge system of copper mineralization coming in, but it's not piling up in large enough tonnage and grade widths to really support a mining operation in this part of the world. But maybe the center of gravity is somewhere farther west, maybe in this area where these 2 sort of 500-meter long conductors exist right within the trend. Something else is going on. So Azimut's not going to do any drilling until it's extended the IP survey and has a bigger picture of what's going on, because yes, the criticism is that, well, maybe you don't have anything better than what Midland found at Mithril. However, Midland used the money that it got from BHP last year to look at a much broader area in the claims that they managed to stake in the wake of realizing there was this whole unrecognized copper boulder field in this part of the James Bay region. They've done lots of prospecting, and they now have 4 more IP surveys planned. One is immediately to the north of the trend that they did the surveys on and drilled last year. So that's one where it remains to be seen what they have. But in a couple other blocks, they found that they've got additional target areas where they get copper mineralized boulders, and one of them what they call the Boromir. It's interesting because they don't have the spectacular 10 to 20% bornite chalcopyrite float and outcrop in that area, but they have a much finer density, bigger density of veinlets within the host rock that's running, what appears to be a boring, 0.45% copper. But the type of setting there could be the tonnage and the grade that they need. And if they can develop a large tonnage of 0.5% copper in that area, then you have something new. And the way Gino Roger and his team are thinking is there's way too much copper that's infused this area over such a large area for there not to be a place or something where big amounts of it piled up. So BHP's initial intuition that there was something different about this region that justified putting in just under $6 million last year at a premium to the market, it is still intact. Midland will be doing more work. It might even end up drilling this. There's still money left over that was from BHP that was earmarked, and BHP wants them to continue to this work. So in terms of the copper potential of James Bay, we have whatever it is that Azimuth and Soquam will do in the western extension of it on the Piqua project. And I myself am quite curious to see what those conductors end up being and what sort of IP is associated with it, because those conductors are in an area with much thicker sand overburden. There's some big ester that comes through there, so there is no surface evidence of outcropping mineralization or any float that would have been heaved up by the frost. So it's basically a blind area. And so it's going to be very interesting to see what the IP survey does there, and also what the IP surveys do for Midland's other blocks in its holdings to the east, and they're going to do some drilling there. As for the focus for the company, well, it's not really their flagship anymore. The attention has turned to the Detour Lake trend in western Quebec. We obviously know about the Detour Lake low-grade mine that's now been acquired by Kirkland Lake, but all the attention now is on what Walbridge found at its Fenelon project, where it has been focused on the historical gabbro-hosted high-grade gold mineralization, of which there wasn't a huge amount of tonnage. And a year and a half ago, when they were drilling this, they ended up penetrating the rocks to the west and came up with a different style of mineralization, which has some very high grades. And last week there was a surprise announcement from Balmoral Resources, which last October had staked the area, or not staked, but that decided to drill what they call the Area 52, which was an extension of the Area 51 geology of Walbridge on the Fenelon project, where they had hit all this high-grade stuff. Balmoral didn't really intersect comparable high-grade, which was a disappointment at the time, but they did establish that the Sunday Lake Deformation Zone had gold mineralization to the south of this, and this would be an east-west trend deformation zone, and they were drilling this late winter, a long hole, and they managed to pass, before they got into the deformation zone, they passed through what they now call the Reaper zone, and that had substantially better grade. That was a 1 meter interval yielded about 858 grams of gold, and a 3 meter interval was 300 grams of gold. So this means that the system that they call the Walbridge Tabasco is extending to the rocks to the south. And Balmoral, of course, is being absorbed into Walbridge Resources. Within a month or so, the company will be gone, and Walbridge will end up not just owning the original fenelon that it got from Balmoral, but it'll end up holding all of Balmoral's land in that area. And Midland is the largest landholder in these two trends. There's the one called the Sunday Lake Deformation Zone, and just to the south of that is what they call the Lower Detour Zone, which is also a fault, east-west running fault-like structure. And the hope for Midland is that going back to the Cassol project, which is sort of to the west of the Fenelon, not that far from Balmoral's Martiniere zone, they made a discovery called Vortex. This was a joint venture with SOQUEM, but SOQUEM lost interest in this, and so they did a swap earlier this year where in southern Quebec, the Gatineau zinc plays, Midland had 7 projects. It gave 50% of each of those to SOQUEM, and SOQUEM gave them back the Jovu and the Cassol project. So Midland now has the Cassol project. It's got the Vortex zone. It doesn't yet have any of the spectacular grades that will get an Eric Sprott excited, but they are now in a location that's getting a lot more respect from the markets than it historically has.
We'll have more with John Kaiser right after the break.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with John Kaiser. John, a month ago, you were quite enthusiastic about the James Bay Niobium project, but since then, the price of Neo Bay metals has slid into the low 20s. Why the pullback during April when most resource juniors bounced back?
That was really puzzling to me, especially since in early April, I put out a major recommendation on the stock in which I did an outcome visualization of what the James Bay project would look like if it was put into production at a 6,000 tons per day. In such a scenario, based on the kind of grades and recovery numbers that the company has published from historic work, all of which, of course, needs to be validated by a proper 43101 PEA that Niobay will deliver in the fourth quarter of this year, I came up with some astonishing numbers, and that would produce sort of 6,000 to 7,000 tons of niobium per annum. Right now, the niobium market is in balance because Arash CBMM through Arasha can increase production at any time. But none of the other mines, the Cataleo nor the Niobec, are really in a position to increase their output. But in the past 5 years, niobium demand has been growing at a compounded annual growth rate of about 6.5%. So the issue for CBMM is that if it keeps growing, yes, they can accommodate it, but with already 80% of global supply, that starts to destabilize the whole situation as seen by end users. And Brazil is entering a period of turbulence where Jair Bolsonaro is starting to annoy the establishment by doing all these crazy things, firing people who are investigating his kids for the corruption that he said he was going to purge from the Brazilian system, and having Arasha become even more than 80% in the long run does not seem like a good thing. So I've modeled these numbers, and And I can see that by 2025, there's a deficit of about 7,000 tons opening up and continuing to grow if that sort of growth rate continues, if CBMM keeps its share of global supply at 80%. Now, there's other niobium deposits around the world that could conceivably put into production, and everybody's dream is to find a richer one than this sort of 0.5 to 0.6% niobium pentoxide grade that James Bay has. But until that happens in a location where it's worth developing and where the mineralogy allows easy extraction, James Bay is one of the better contenders to provide that fill. Now, the price at the time I recommended it was sort of 25, 30 cents, and the stock had started to rise. And my numbers, I'm not going to reveal them because the whole reasoning and that are for my subscribers right now. In the start of the year, I suspended new registrations for the individual membership because I was going to redo the website. But thanks to COVID-19, the excuse for all things not happening, the new website's not going to happen in the immediate future. So I've reinstated the ability of subscribers or of newcomers to register at Kaiser Research Online and see my stuff. And this one's important because if my numbers are reasonably correct, we're talking about a 50 bagger for this stock based on the niobium security of supply solution that this project can have. So my readers started buying it in April, and all of a sudden their buying pressure is getting clobbered by supply. And at first I thought it was due to the 35, 38 cents flow-through and non-flow-through financings done in December, coming free trading in mid-April. And this was done mainly with Quebec Inc. But then I did some further searching, and it turns out that since March 1st, one brokerage firm has been responsible for selling around 2 million shares into the market, and we're busy liquidating it as low as 22 cents. And so obviously this was a seller who probably wasn't one of the Quebec Inc. shareholders that are the main shareholder base of Nile Bay Metals. I suspect it is a group that had a large position, that believed in the project, but in the wake of the COVID-19 crisis have acquired cold feet about how the future is going to unfold and have been liquidating the stock. So while the rest of the market was bouncing back after getting the smackdown in March from the COVID-19 escalation, in this month this stock was actually going in the reverse direction. I think this is temporary. This seller is probably gone soon. And if anybody wants to see how I visualize the future for this James Bay project, I do suggest that they subscribe to my newsletter.
John, thank you so much for the update.
You're welcome, Jim.
We've been speaking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.